All right, all right. We are streaming live. So, give it a moment. All right. Hey, everybody. Welcome, welcome, welcome. It is me. This is the gift to you for doing 1 year of live streams on YouTube. So, let's jump into everything, shall we? All right. As usual, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, and fun only. It is not a recommendation to buy or sell any financial instrument. If you desire personal financial advice, consult a financial advisor. All right. So S&P 500 right here. Lots of people worried for some reason on that gap down overnight on earnings. I mean, earnings is the big story of the week. We've got a whole multitude of them. Let's see, zoom this up just a little bit. Tuesday we saw Alphabet, Google. Everybody knows it as Google, right? They're announcing their 5th consecutive quarter of declining earnings on ad revenue, and kind of suffering for that today. We can take a look at the chart. Microsoft also announcing like an $800 billion expected charge just on top, above their energy estimates just to run their server farms and company. I mean, who didn't know energy was up? I don't know. Anyway, today, before the market, we had Waste Management, Boeing, Hilton, Hess, Harley Davidson. These are some of the big ones. A little bit of restaurant coming in there. Today, after the market, we have the company formerly known as Facebook, Meta over there, Ford, Teladoc, ServiceNow, EQT, Anali, Wolfspeed, KLA, O'Reilly Auto Parts down there. That'd be interesting to see how they're doing. Then tomorrow, of course, we can talk about that because I'll be live streaming every day. But we have Apple and Amazon and Intel coming in tomorrow evening after the market close. Comcast before the market open tomorrow. Caterpillar, that's a big one right there. If you didn't know that Caterpillar kind of, when the economy is about to slow down, Caterpillar tends to start leading the market. And then when the market's about to turn, Caterpillar starts leading the market out of that too. So it's kind of I don't know, canary in the coal mines, so to speak, on the economy, not necessarily the stock market. So that's an interesting thing that I've always kind of kept an eye on. Now, overnight, we did get a big gap down on S&P 500 and on Nasdaq. As you can see, Nasdaq further down the line here, and mostly in part due to Microsoft and Google. So Microsoft taking a nice big fat gap down right there on the daily. I mean, what are you going to say? I mean, oh my gosh, 800 billion. But it's not a lower low, so this can still be quite bullish. And if we pop down a time frame, kind of zoom it up just a little bit, and we look at what kind of retrace this was. Now look at that, right to the 618. Right up to the roadmap line and right down to the 618. Beautiful setup. If they can probably get back above 230, 240 or so, this thing can be set up to get a nice run higher. And what do I mean by nice run higher? Well, being conservative on the estimate here. Yeah, 256 to 260 for the next move. So looking like something like this. Now Google, Alphabet, whatever you want to call it, came up, not quite as bullish there. Not, didn't quite hit the roadmap line. They're actually, I'd have to go look at it. Doesn't quite look like that's a lower low. Got pretty dang close, but not quite as bullish here. And not used to these numbers that are divided by 10 yet on Google after that split back here. or 20, I guess. 20 for one. Yeah. Getting Amazon and Google confused on how big a split it was. So Google has the opportunity to find a base in here and get going. But to me, you know, the bigger picture, the thing I've been talking about since July, this not a recession, 5 consecutive quarters of lower ad revenue indicates to me that companies have been peeling back on their ad spending for 5 quarters now. And that kind of is consistent with not a recession, right? Everybody agree? Everybody understand what I'm talking about there? So, anyway, that's kind of what we got on tech. And of course, that, has an effect on Nasdaq, since they're both very large components of Nasdaq. I mean, we're just seeing it pull back into this roadmap line on the 4 hour. On the daily, I mean, it hasn't even broken out of the trend here. And what trend am I talking about? Well, if we grab the line here, run the line. That's the high, and we just right up to it, and we got a little pullback today. Negative reaction. No. Primary expectation on this, since it's green candles coming right up into there. I mean, look at the pattern here. Green, green, and a red hit it. Green, green, and a red hit it. Green, green, green hit it. And still green after we bounce down. So this could be the bullish breakout. If this does, I'd be looking for a move right up into this roadmap line right up here as the next test. If we can get above that, then things start looking a lot better for Nasdaq and all those tech companies. Now S&P 500 a little further along here. Of course, my trend line is drawn off of where we have 1 high, 2 high, 3 highs, 4 highs, and we kind of broke through, consolidated against it, and then we're launching out. Now, if we drew the higher trend line here, right off the high, we're just coming up to it. So getting that same sort of reaction right there. I do expect us to come on up a little bit more and test this as I've got that 3950 and 4000 level, especially on the, let's see, save this chart. And this is my actual paid account, so I have all these fancy charts set up here that we don't normally see during live streams. But yeah, right here, this is the simple chart I show over and over. We're just kind of chugging right up that arrow. So this red zone up here, the risk is that we find resistance up here and bounce all the way back down into this consolidation here. So it's something I've got my mind on, I'm keeping an eye on, and you should too, basically. All right, you check on all chat. Yeah, if you got questions or something along the way, let me know in the chat. I've got my eye on it over here. So anyway, this is kind of what I do every day is come in early, and I'm checking out these charts right here, particularly on the futures charts, to see what the overnight action was, and get my head wrapped around the earnings and whatnot that comes out overnight. And I'm usually down on like a 5-minute chart. So if we look at it here, zoom this back, look what happened. I talk about the roadmap line providing support and resistance in the markets. Well, this 5-minute, we kind of rode it all night long. It's kind of what I refer to as riding dirty. We're just kind of a little bit break below, a little bit break above. You can see we did that right over here too yesterday, overnight hours, and then broke above. And we kind of did that overnight tonight, and we need to break above again. Break out higher than there, right there. So this is delayed. I do have live futures data on another computer. So Nasdaq right there, getting the bigger pullback right into the consolidation it had yesterday. So no big damage done, really. And then Russell is continuing to lead, which is kind of I was talking about Caterpillar being a canary in the coal mine. Russell is kind of my canary in the coal mine for the broader market, as far as it tends to lead. All last year it consolidated, while right up here all last year it consolidated, while the market, being the S&P 500 and Nasdaq, kind of ran higher to all-time highs. This thing did do a little spike to try to catch up right at the end of the year, and then it kind of led the market down. And now it's got a more bullish pattern than ES or NQ, that's S&P 500, or Nasdaq. So those are both, kind of lagging Russell in the pattern that could be a bullish pattern out to an all-time new high. So anyway, got my eye on oil also for this reversal I've been talking about for, seems like forever. This is looking slightly bullish, but we need a move back up through this 90 area to really confirm that the game's on. Potential for a move up to the 150 to 200 area. Extremely bullish. Historically, anytime we drain our strategic petroleum reserve in the U.S., it leads to a new high in oil. If you weren't aware of that, the way I'm kind of playing this, if you didn't know, there is a shortage of distillates. And right now, this right here, Vanek oil refiners, these guys stand to, make a little money on a shortage, if you will. Running the same kind of trend line here. And we're just kind of parked right at the roadmap line. But I bought a few shares of this. Why not? Why not options or something? Well, I'm not sure how long this is going to take. But I did buy some shares. Look for this thing to pop right back up here in this area. Right up in there. So right around 36. And move up from 30 to 36. I mean, that's pretty healthy gain. So, all right. Moving on. Oh, right before I went live, I got an alert on this one. Looky here. If we can get up above here, especially break out above this prior high right over here from back in August. Super bullish for the continuation higher. So this one I've got my eye on, along with Bitcoin. We're really starting to look strong. We need this one to make some higher highs here. Same kind of trend line set up, highs. We did finally push through, pushing up. Watch for the resistance at the roadmap line there, right around 23,000. Getting above there, and above this high is bullish, and above this high becomes extremely bullish. Back above 25,000, and we could be game on. Get back into the mid 30s. That's where a lot of the crypto miners become profitable on their investment in miners. It's right around the 35,000 level, and we're also in the halving run. So, that halving run potential can kick off anytime now. It'll kind of be a slow turn until we get to the halving in March 2024. And if you're not familiar, that's where the payout rate for mining a block of Bitcoin gets cut in half. So right now it's like 6.25 Bitcoin per block mined. It'll get cut to, 3.125. So Ethereum finally becoming deflationary after the merge event that happened on September 15th, and coming right up to test the roadmap line. Get back above 18, right around 1800. I think I said 1790 last night. Can be extremely bullish for Ethereum. We could see prices back up into 2500, even kicking off a nice big fat move up. All right. And Mara could look like a reverse head and shoulders, and it entirely could have that in there. So yeah, it's got zoom this up a little bit. Kind of sorta could have that in there if we grab that tool, throw it in here. Kind of being sloppy a little bit. Didn't quite get that one high enough. There we go. You could put it in there, and then the distance from the head, you know, those are all kind of very consistent size. Usually your shoulders are half the size of your head. That's it almost looks like shoulder, 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 or head, head, head. But that would put it right up to the 17 area. And that's entirely possible. We may see it move up into that zone and find a little resistance. It's just pushing right on through these numbers here. So that's pretty bullish. Yeah, may find a little resistance up here. Right where we get to the old high from August. All right. Well, what else do I have my eye on today? Oh, let's talk about some of these. XLE. Look at this breaking out. This is right above the red zone here. Quite possibly, you could buy some options or you could buy some shares looking for this $100 price target up here. And it's interesting to me that the energy sector funds and like XOP right here are all being quite bullish compared to the oil chart. It looks like they're going off of the gasoline chart quite a bit. And gasoline coming up to the roadmap line today, break above, can flip this back into bullish instead of bearish. And natural gas kind of getting chopped up just a little bit today, but up off the lows. And a lot of this is related to the DXY coming off of its highs. Now, if it continues this three-wave move down, we could look for support around 109 or even 107, 108 kind of, and then really extension down to the 106. If those levels just don't hold at all, then we could see this break down and actually turn a little bit bearish. This could be topping out. I mean, this thing was on a monster run from the bottom down here in 2021. And it looks like it needs a correction. I mean, that's a heck of a move up, and we could definitely see a correction. This could be just a first part of a bigger correction that we get in DXY. This is just the dollar, if you're unfamiliar. Looking at the bigger pattern. Could have a little higher to go. I was looking for 115 to 120 as the top out area based on this stuff back here, but it definitely looks extended. I mean, we went up really high, really fast. Last time we did that back here in 15, and then we kind of chopped around and came back to the roadmap line. Then one more final attempt, so we may see that where we chop around for a number of months till we get back to the roadmap line here and then pop up for that final little push higher. So, all right. Looks like lumber I was expecting to pull back into this maybe 200 to 300 area down here off of these giant moves, and even as low as undo that, even as low as 84 if it really got, I mean, that would be crazy cheap lumber. But that plays into the housing. DR Horton. And there's DHR, right? DHR, nope. DRH, nope. I can't remember. Stocks. I don't even see them on here right now. Moment. And let me know in the chat if you remember DR Horton. I can't remember it off the top of my head, and it's not pulling up for some reason. I thought I had it over here, but I don't see it. It's like I cleaned house. Anyway. All right. And DHI. Yeah. There we are. So DR Horton could suffer a little further down. still below the roadmap line there. And there's a few more home builders. Was it HPI home builder? Haven't messed with the home builders in a while since I gave up on them back in June. So, all right, thanks in the chat. I appreciate that. Let's see other things I'm watching. Let's see. Hut also getting a nice little pop there. It's got a long way to go to get back up into the 16 area. It's been a lot of time consolidating at the bottom here. BT, if you're in Discord, I did buy some of this yesterday. Mainly looking for about a double. Only looking to go back up into this back up in this red zone here. Back around 220, something like that. If it really got excited, it could get up to 5, and that'd be like a 5 times your money right there. I did not put big money on this, just a 1,000 shares, 1,100 shares, if I'm being completely honest. Did buy another 100 shares in a cash account. So this could pop right back up in here, and we've still got, like if this were to go back to the highs, 34 times your money, 33 times your money, something like that. That would be absolutely insane. So maybe it's worth buying 100 shares and just letting them sit there. So, but the crypto market's got a long way to go to get out of the funk it's in. I read an interesting article on silver this morning that COMEX probably only has like 50% of the silver that they claimed that they could back up the futures contracts with. So if for some reason some sort of problem occurred in the silver, we could see a massive spike just because of the shortage and the inability of the illiquidity of the futures market, just because the physical silver is not there to deliver on the contracts. So that's a potential out there, something to watch. I'm not sure that it's going to happen because they're allowing people to over leverage futures contracts. If you had a max position of 3,000 futures contracts right now, you could essentially control 10% of the liquid silver market. Let's see, was it SI1, XH1? Nope. Do I have it over here? My futures list. I got gold, copper. I don't have silver listed. Oh, that's because I want stocks, not all. SI1 exclamation point. There it is. Yeah. That's ruble, not SL1 exclamation point. There we go. Silver deliverable futures. Now this is deliverable, not just silver messing around. This is not paper silver. This is deliverable silver. So it's interesting, and this could cause, we saw this big spike back here, and we saw talk of a potential shortage in 2021. Well, this could spike out of here. So this is something to keep an eye on out there. How do you trade it? Well, that's a whole different story. Physical would be the best way to take advantage of some kind of shortage. And then, is it liquid? I don't know. That's you need your unicorn dust to be able to tell that kind of stuff, right? Alrighty. Well, that's gonna kind of wrap it up for today. That's the things I have my eye on today. And remember, if you're in any of the things that are reporting earnings today, or even in the morning, watch out. We've got, like I said, Meta, Ford, Teladoc, ServiceNow, Nally, Riley down here. Got Comcast, Caterpillar. Oh, I mentioned we look at Caterpillar. We can do that one little final thing before I wrap this up. Yeah, so Caterpillar trying to get a little bullish here. We've got this long-term downtrend that we've been cooking that we're going to have to break above. So this could be indicating that was a relative bottom in the market. Now we have poked up through the roadmap line a few times, gotten a little super excited here on CAT a few times in the past. So it's going to take some work to get back to really trending like we were back here in 2020, or even back here, you know, coming out of the financial crisis funk back here in 2016, 17. You can see we started easing off. Like I said, it's kind of the canary in the coal mine. This one started easing off in 2018 as we saw less stuff building. It was more hype into tech and stuff like that as we went into COVID. And then popping out of COVID, we actually saw people investing in building stuff. And then we've kind of chugged down again. Now, do we pop again, or does this chug down continue as the core economy building stuff deteriorates a little more? So I don't know. Something to keep an eye on. If we can break up and get out of kind of this downtrend of lower highs, start breaking back to a new higher level here, it can be quite bullish for the economy as a whole. You know, we came down to about the 50%, it looks like. A little in between the 50 and the 618. Yeah, right to the 50. Yeah, right there. So that's a setup for continuation right there. Especially if we start breaking back above 200. That's that'd be like an aggressive signal right there. We break above this. That's, you know, a little bit less aggressive. We break above this. It's less aggressive on your entry. And we've been looking for a move out to 269 to 299. All right. So those are the things I'm kind of keeping an eye on. We'll talk about more stuff over the next several days because we're going to do this every day for at least a week. And thanks for watching, everybody. We'll see you again soon.